Okay, so I know this guy that does a forex hangout, and he's trading without stops, which I'm astounded by. But I guess that's what makes trading so fun and such a personal thing. And so, everybody has a different view of the market, and there's so many tools out there now. You can really go to town. I mean, if you stacked everything you could think of on there, market profile, moving average envelopes, a nice Duncan channel, or whatever they call it, you know what I mean, clunky channel, RSI, stochastics, fast, slow, medium, over easy. It's no end to it, right? And so, you know, so this guy's going to change his strategy possibly. And I know this feeling. We all know this feeling of getting on, trying something new. And it's definitely nice. But what you'll find out is that it's just like finding a new girlfriend. All girls are alike. I mean, to some extent, even lesbians, I think, because they're very territorial. So, I think you'd have the same issues are going to crop up no matter how you paint it. So you can get your girlfriend. In fact, if this is where it becomes a power thing, and of course the market doesn't know you exist. This is another big problem with all of the metaphors about sex is that the market doesn't know you exist, so therefore you have this bizarre relationship where it does not. You could stop your feet and it just doesn't care. So if you've, but for a woman, she would go under the. She would be submissive typically to what a guy's going to do because he's bigger and stronger. So you kind of have to be the chick in the market in the relationship. Unfortunately for guys, it's not really good. It does not work out too good. If you told a girl or a lady, "Hey, lady," if you said to her, "This is what I want you to do," of course she'd probably think it was sexual. But here, place these orders and stuff. I mean, I don't want to beat up on this forex hangout guy, but his wife could out trade him. I'm sure if he said, because he's got too many. We've all got. I think we're all too close to the market. If we're close to the market. So he trades the 5-minute chart, which blows my mind because the way he trades it for a big breakout, and then he doesn't care to he doesn't mind chasing a little bit. So I found that mind blowing. But this is the same theory of women. I don't think I'd chase a woman only because it's just, it's brutal. It's like a trend. So if 22-year-old girls are trending, which they typically are, this is wave 3 of their life cycle. That this is where you want to jump on it about right there, right? Because they're still fertile, and I don't think it's any different to the market. I mean, I think we're chasing, and this guy's a trend trader. So why I could never? I guess we're all trend traders if we rationalize it. Oh, it looks like it's on a trend in this time frame. In other words, the idea of a trend is so ridiculous because, to me, there's burst moves. Like there's a big rally or there's a big sell-off. That's a trend to me. That's wave 3 or wave. That's a C on an Elliott wave. A, B, C is the biggest wave. So a correction. If you don't know, you're either in C or 3. You're either in wave 3 or C. It's a count. It's a rhythm. I think a lot of people miss the point of Elliott wave. It's a rhythm method. Not that you should try to, so you don't get pregnant in the market. But wave 3, wave C. I mean, this is the wave you want to hump and dump that. You don't want to sit around these fucking trends, but I don't, just because I can't take it. If I'm up X, I want to get out with X. This is if I'm in front of my terminal and I can dance with the market and go in and out, and we can have a relationship. Then I would do it. Okay. I would dance with the market if I could do it. So if I'm swing trading it and I'm like, yeah, whatever, look at the daily here. You're going to wait 3 days to get paid. It's a whole different mindset than, holy shit, I just made the same amount of pips. It would take 3 days. I just made it 30 minutes. And you can see all the 30-minute trades here and the 1-hour trades here. Mind-blowing. Mind-blowing market. They bid it right to the edge, and it rips back. So range trading is going to be the most money you're ever going to make in your life. Trading, I think. With very good ratios. So the ratios are very dreamlandish, and a lot of beginners say, well, I'm happy to do break even. Okay, but you should throw some greedy trades in there. And the problem for me is I'm not a greedy person. Somebody asked me, why are you doing these videos? Because I'm not greedy. In other words, I'm not going to sell you something. And besides, it wouldn't fit you anyways. Like the clothes I'm thinking about that this girl's going to wear, she probably wouldn't buy them for herself. And if I was a clothes designer, I mean, that's another thing is everybody's so trendy that there's no originality, diversification. Everybody's using a candlestick chart. Well, fucking goddamn it. I mean, come on. Well, it's a candlestick. I'm okay. How about a line chart? If you take out the bars, once you take out that range, and you look at just a line chart, you're like, okay, this is only one part of the story. That's just the kick drum. Can I hear the rest of the song, please? So if the market's behaving, and this is a whole argument for Fibonacci, so you should be able to put Fibonacci on a nice hit song and go, look it, they turned around right there on this beat. I mean, the syncopation is the thing, though, in the market. The market's syncopated. It's not linear. So it does a bounce, and it ricochets, and it starts to vibrate. If you look at the news, you'll see you can even get like a 2-hour. If you go into MT5, you can use all weird time frames. So if you're really in love with candlesticks, you could do like okay, here's a 2-hour doji. How about a 2-hour gravestone? How about a 2-hour like dragonfly? You're like, damn, look at this thing. Now you know that that's a very volatility was there and then it's not. It doesn't mean that it opened and never changed and closed. It's one beat. So it's if you every other beat. And this is when people get into the Elliott wave and the counting and how many bars and all this kind of stuff comes into play. Taylor methods, 3 day down, 1 day up. In the end, it's going to come down to like this guy here at this forex hangout. He's making money. I guess he took a hit, but if we're trading big, like he trades psycho big with no stops, and he claims he upped his ante. And I don't think he put in 2 tickets. I think he just took 1 ticket and says, oh, well, I'm just going to add X. To me, that is like having a car with 1 gear. Like I could never do what this guy's doing. And it just goes to show you, I'll just terribly sound insulting, backhanded compliment. If this guy can do it, anybody can do it. I mean, if this guy's doing it without a stop and, he hasn't blown up his account. But you could have more than one account. And he doesn't want to worry about first in, first out. So I don't think he's wants to put on more than one position. He just puts in raw positions. I mean, he's shooting like with a musket, in my opinion. No offense. He's taking and loading up a lead ball in this thing. And I'm like, oh, jeez. I mean, and he's got it loaded so it's a shotgun. Or he's really, if you're going to wait to get paid, or if he's going to just chase this thing and get a bad fill as soon as he gets in, he's down the spread. Plus, he's probably going to take some heat, and he doesn't mind. And gets out. I don't know when he decides to get out of these trades. And so anybody that's criticizing what I've said and done on the internet comes from the standpoint of. I also had some guy comment about this Mark Douglas video where I did a snapshot of it. Define your risk. He says everybody does that shit, and look at everybody's losing. No, not everybody does that, and trading is such a you're just looking in the mirror to some extent. I think you're looking at your own thoughts about what you think is going to happen based on some goofball indicator. Now, it doesn't mean that you can't understand how price, when you see how price affects like RSI, You can strip away RSI. Basically, what you're looking at with RSI is just an index. So if you could see an index of how you drive around in all those dumb places and all the women, all the bad relationships, and all the whatever it is, bad cars you've driven, and you could see an index of that, you could somewhat, I guess, estimate your next stupid move, maybe, with the RSI 3-period. But it's just the breadth of the market. So people talk about the breadth of the market. Now, when I see the market smash up hard, fast, and down fast, I'm thinking, uh-oh, this might be a smash down drift, smash up, drift down. After a big move, wow, what's next? And what time frame was that on? So big 4-hour down, bam, smash down, and then get quiet over in Asia, get into 2 4-hour candles, 8 hours of sideways. Holy shit, it could just keep going. Or it's going to retrace, drift slowly. Now, if you're in the edge, and you should be able to just do this in your mind's eye, if you're in the edge of the 2-month, you're near a monthly chart, you're coming into the bars, just think of a good old bar chart, Western style. It's right when we shadowed up. Martingale, you got to use your Western charts when you're Martingale. You got to have the bar chart. I like the classic bar charts, honestly, with the hash marks. But, you know, these markets, I think you really have to accommodate them. You can't ask the market to fit into your indicator, and you can't, like I said, this is like going into the clothing store and buying clothes for a girl that doesn't exist yet, and you got her whole wardrobe picked out. And now you're going to go look for a chick with a size 9 foot and all this stuff, right? And I think that's a trade plan. But if each outfit's a trade plan, imagine each outfit's a trade plan. Instead of having a whole wardrobe closet go, this is it. It's going to be just like this. You're asking too much of the woman you've abducted. So if you took her home to your man cave and you go, don't worry, honey, I know you don't want to be here, but look what I bought you. I bought you a whole wardrobe. As opposed to, I bought you 10 outfits. Now, what's better? To have one outfit or 10? So you've got to be, it's going to sound bad. I think you have to be the market. You have to be a bitch to the market. You have to do whatever the market's telling you should do. And if you don't like being told what to do, you're also in trouble. Now, all this stuff comes up in trading, I think, because there's times when things are, there's times when things queue up and you just happen to be there and you think, oh yeah, look at this. Oh, my moving average is pointing up there for X. You know, moving average up would mean I'm going to buy on pullbacks. It's drifted back a little bit. Yeah, I'll buy a little bit here. And you just happen to nail that pullback. And it just happens to be, right now it's 4 p.m. and we're getting a pullback here. And I think we could drift up to 124. I'm going to get to the charts in a bit here. So, so the whole thing about when people come down on me because they say I'm full of shit, I say, listen, what I'm saying is completely logical. Whether you are awake to pull the trigger on that trade or you had the balls to place the pendings, I think it takes more balls to place a pending than it does to pull the trigger at the market. Because when you pull the trigger at the market, you know exactly what you're risking, and you know you're it's a completely different mindset. If you laid pendings, that's something you could teach somebody to do. And if they've never traded at the market like a fucking idiot, then they're going to nail it, right? Because they don't know if you don't let somebody know. But see, you know you can do it. So you can fuck your account up. And this guy trades at the market. And I'm like, how in the fuck? Like, with real money, just jump on a trade. I'm like, whew. And then this guy could take so much punishment. I think if you told this guy, well, there's a bomb in the room, he'd be like, okay, let's take a look at that. I mean, he's raised kids, right? He's raised kids, so he's totally conditioned for pure chaos. And I think that's another thing. How do you feel about chaos? Some guy in the comments there, his name was FX Precision, and I thought, oh boy. Forex, where's the precision in these markets? The only thing I know for certain is the clock's ticking. 1 minute goes by, 3 minutes go by, I'm underwater on the trade. So, or I'm not, I should have taken profits earlier. Now, I don't know who in the fuck, it doesn't occur to them. Shit, I was just up 1,300. I should have got out. Now I'm only up 800. And I think that all the energy's gone out of the market and we're just drifting. And I guess she had a climax. I missed it. I'm still humping her though. So this is the problem. But it just fits so good, right? The market has a big spike, okay? Screams like the devil, and you're still thinking that she's. Of course, these women can have multiple orgasms. Don't forget, and the markets kinda can. I would say a trend that kind of has a bunch of price pulses. It might be an extended multiple orgasm, whereas a news event, boom. Actually, during the news, I think you come back and retap that. It does get pretty crazy, and especially if you're looking at the 1 minute chart. It's very scatterbrain looking. But this guy here blows my mind because he's doing 5 minutes. Now I'm not trying to be mean here, but I just want to think what I see when he's talking. I think I made a comment about this guy's video once. I said I talked to the guy. We've all talked on Skype, so I'm not trying to be mean. But I'm just not gonna. Also, I'm not gonna not say what I'm thinking about what he's thinking. And I don't even know how he does this. I mean, how he chases the market, because I'm cringing every time. I can't think of somebody I would completely trade opposite. Like I said, it doesn't matter. He's making money because he shows up. He doesn't trade during crazy news. He's doing all the things so he can make money. So making money has nothing to do with, are you trading properly? In other words, I think I know exactly how the markets are built, and what they do over and over again is they fill these vacuums, and you can have an 8-hour vacuum. I'm going to show you a 12-hour vacuum. You're like, that's it? That's all there is to it? Oh, yeah, sorry. I mean, it's not this is the big heartbreaker. My buddy who shreds on guitar, he's a guitar shredder, you know. It's getting paid by the note. And he said he was so disappointed when he found out some of his favorite hit songs only had 4 chords in it. I go, yeah. And that ain't that a bitch? The market's up 20 pips, it's down 30. It's up 20, it's down 30. It's up 15, it's down 10. I mean, this is every hour on every beat. Oh, chord change. Oh, go this way. Okay, go that way. And it's very disappointing to find out that there's nothing magical here. And the reason why people say I'm looking for the Holy Grail is because they think there's some mystic secret to trading. There's not. It's literally, it's two worlds. It's, like I said, it's at the market, and there's the pending mindset. So how would you eat dinner if you go back to caveman days, right? You're in your man cave, and you've got to have something to eat. So what do? You oscillate between, there's only two choices. You're either going to get yourself a bow and arrow or whatever it is, a club or a laser gun, and you're going to go looking for game. You're going to try to nail this bitch while it's going, right? But there's another option. You could be a trapper, and you could place traps out there, big bear traps and shit. All sorts of stuff, deer traps, cat traps, mice traps. And if you know where these paths are, you know how many pips from home base these animals run, you would just place these traps and come back the next day and see if you were right. Of course, granted, you are spending labor placing traps that may never get hit, as opposed to the guy with the bow and arrow going, oh, I think I hear a deer, I'm gonna chase this deer, I'm gonna track it, and I'm gonna kill it. And I'm kind of guaranteed, if I see it and I'm good at my precision, if I'm a marksman, right? This is the sniper view of trading. Oh, dude, I'm a sniper. Okay, great. How much gunpowder are you using? How many shots are you going to take? Are you going to build a position? Are you going to take this thing down in 3 shots, or does it have to be like 1 shot? And And I think that's the ego. Right? Oh, dude, not only am I trading, but you should see me trading. Boom, I'm in. Now, you would need a tight spread for that. And you could just all day hammer that. There's some guy I talked to in France or something that does that, some kid. He can kill it until the market goes against him without a stop. And he would give, so he can make $2,000 a week. Talk to some guy over there. $2,000 a week. And yeah, of course you can. And then you can just lose 10 grand, bam. So you could actually make 20 grand a month and only clear, and you could make 20 grand a month, lose 10 grand, and still be up 10 grand a month. And you could go on like that for years. And everybody's doing that in a way. In other words, it's not the amount of money, it's the percentage of that stake. So if you're up $150 and now you're only up 75, but you always take your 75 and go, you're consistently making money. In anybody's eyes, you're an amazing trader because you're consistently making something. Now, I could not do what this guy's doing, which is have a mental stop. I would just freeze. I'd be like, I'm down fucking 18. I'm like, and my mindset is being too romantic. I'm going to say, well, let's see what happens. Not a good, like, so this guy's not going to entertain that. And just, I don't think it's a secret. This guy's been married to the same chick for years. So he's very consistent, stable person, where I think I'm out of my fucking mind. Severely, some guy asked me why I do the video. I think so I don't lose any more of my mind. All the shit I've seen, all the stuff I've heard. Like I said, I just did this video on this guy doing this fucking soldering welding pipes, or tubes as they call them, apparently. There's some guy in that thing that said he had a PhD and he went to 30 years of plumbing school and shit. And I'm like, oh my God, this guy's like, it's like a trader saying, well, I've studied this, that, and this, and I can recite Fibonacci in my sleep and blah, 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 but it's not helping get through this raw dog logic and reason that we can all see in the markets is that if you're using indicators as an excuse so you can get in the market, of course, and you might be making money because mentally you don't mind just jumping in and you can manage that trade. This is where people say, well, if you manage the trade, okay, but you could pre-manage it and say, okay, I got a gun here. I know how caliber a gun, how long the bullet's going to be. I can pull the trigger, boom. I can pull the trigger, boom. I'm like, no, I got like 19 shots in this thing. I got some Glock or some shit. And I know that the first two I can just fuck around with because I'm like, yeah, dude, I got 17 left. I'm just trying to see where this thing's sighting. Okay, it's a whole different mentality than coming in there with a fucking bazooka and saying, oh, I got one shot or a missile launcher. And, the sniper concept, this idea that you're going to have a spotter, and this is be your moving average and whatever the fuck, and you're just going to kill it, dude. You're fucking that good. I mean, it's not about money. If you've got enough money to trade, you're already successful. So, yeah, I could just go on forever about the market because the market's life in the end. You're not going to be able to turn off your feelings of resentment or whatever it is, or being taken advantage of, or winning and losing. Because if you're losing at trading and you're losing, say you just lost, let's say you got a flat tire. You're like, fuck. That's not a good feeling. Then you lose on a trade you're in. You're like, fuck, man. What a day, right? So it's 2 losses stack up on you, coming after you. And so it matter, And so I see this guy here, and now he's falling in love with this new, not falling in love, but he's the reasoning going into why he's choosing to use an indicator is because he's a trend trader. So this is another thing is that I could be a trend trader and I could be a range trader. But I prefer to be a range trader for my wallet and a trend trader for, I guess it's an ego analysis reason maybe. I think the range is critical because it immediately invokes, when you say range, you say, well, how big a range? And this is when pips come in. When you say trend, there's no attachment to risk there, in my opinion. And no attention, and you're not talking about pips either. You don't say it's an 80 pip trend. You say it's an 80 pip range. So range traders make money because they can think in terms of like, dude, it's down fucking, it's on sale by 19 pips. Let's get in here. And if it goes up 3 pips, I mean, you can literally read the ticker and go, I think we're getting filled. The chart, like I said, the chart is a visual thing. So you're a visual trader and you're looking for these. I hear this guy, this other guy, Ryan Brown or Brown Ryan, Ryan Brown or something. And this guy is just, oh my God, hot wife. I think the guy's gay as they come. He just should just go gay. And he's trading. He's a fundamental trader buffoon. So man, it's just too funny what's going on out there. So let me see here. So I don't want to disparage anybody. There's nothing I could say but bad things. So, the thing is that this guy's been making money here consistently. So if it's not broke, don't fix it. But he doubled his risk dollar-wise, I think. I don't think he split his ticket. So he's trying this new thing now. I think the rationalizations that come up are just endless for anybody. I think, like I said, there's this girl I was with once, and I mean, I'm not gonna lie, she's very good looking and very young. So I had to rationalize all the things wrong with her, the fact that she's out of her mind. So you have to just put that on the back burner and go, I mean, it's like, so you'd have to do that. Just like if you had a nice car that you couldn't drive in the wintertime because it wasn't cut out for it, you would just say, oh, but it's worth it, So is it worth it? That's the question. And there's a reason to jump in that nice car. So this stuff's I don't see how this stuff is not coming up in anybody's trading that isn't using a robot, because if you have any feelings, do you feel better winning or losing? Now, if you're losing and you're like, oh yeah, I know I got in early. I expect to be down. In fact, I think I'm going to be down some more. And should I add to it? Should I add to a loser? And this is the whole idea. Martingale, they're claiming, is not a good idea. It's the best idea I've ever heard in my life. I'm not saying that you double how much you're buying. No, that you would linear risk, but you would wait. It'd be a time-based entry. So every 4 hours is down, you buy at the market, something like that. Also, you have the price grid in there. So you're either going to put, and once again here, we're stuck with these two fork in the road. Are you going to lay a martingale array out there and say, I know I'm going to buy down there anyways. I just know that I want to be a swing trader. I'm willing to be 150 pips underwater in this trade. I'll lay this grid out there and I'll just do it. Or are you going to be, well, I want to make $100 a day scalping the market. I'll trade the London Open. I'll get one smash. I'll get like an orgasm there. I'll have a wave 3 and I'll be done. I want to come back and try to, get everything I can out of that trade. So, or you say, well, I don't care. At the end of the week, I'm going to look at my stats. It's a zillion different approaches, and there's no one right approach. I think the only approach is that you just have to, kind of enjoy losing. Sounds terrible, but you got to enjoy, like, well, you would have in the relationship anyways. So, you would say, well, we're going to go out to eat. Well, I'm going to lose on this because we could have made this cheaper at home, and we could have fucked like rabbits on the floor in front of the fireplace. But my girlfriend wants to go out to some stupid-ass high-end restaurant. So I think men are practical with that, and But if you told somebody, like I said, you can't unring the bell in your head. If anybody's ever made $1,000 scalping, or even $100, they know that that's possible. So your mind recorded that wonderful flavor of winning very quickly. So that's embedded. So is the losses. So is the fear of like not following your system. It just so this whatever's happened and you've made money, you're probably going to keep doing that, even if it doesn't make sense. Because the universe is benevolent. It's really hard to kill yourself. You could hold your breath and try to die, or you could, it's hard to kill yourself. So it's also, it's not hard to blow up an account. I mean, you would just put on really big size, but you could do that in a car. You could just go as fast as the car goes and not hold on to the wheel. And so you're really easy to blow up an account. This guy did a video a while ago called "Can you get in the market randomly?" Well, yeah, but not too big, right? You'd have to cut a slice out of the pie. You couldn't just put on the biggest lot that your broker would allow, because all it has to do is move like 10 pips against you, just blow up the account. So the amount of pips, and I guess he's claiming he lost 800 pips. And I don't know. He's trading 7 currency pairs. Nothing I could not do what he's doing. I could not trade 7 currency pairs like that. I would just look at one pair and go, you know what? I always know what time it is. I mean, I always know this is happening now. Plus, I don't have any of this distortion of like, well, what's the dollar doing against this and that? And I see these people. I'm not saying I can't. I'm not saying I didn't try doing it. Right, having 5 girlfriends. No, I only had 2, I think, at one time. A 2-timer. But on one thing at a time. So I'm easily overwhelmed. It's very difficult. And plus, I think that, also this guy's switching between 5-minute and 4-hour. If you're going to trade the 4-hour chart, you could pretty much just trade the 4-hour chart and you would not be over trading. 5-minute chart, why bother, man? I don't know. I just don't get the 4-hour. I mean, okay, I'm looking at the 30-minute chart right now, and that's plenty of drama. The 1-hour chart's plenty of drama. 5-minute chart, I don't know. So here's his new approach, strategy, possible strategy here.
Put it in this Euro ghosting thing, and I kind of explained the.
He's not that loud.
The thought process behind what my current chart setup looks like.
I'm louder than him.
It's like this.
Oh well, sorry.
So, ideally, if you're trend trading, you want to do a couple of things. You want to be able to recognize the trend obviously, and always be trading in the direction or the pressure where the pressure of the market is moving. Right, makes sense. And I think you always want to try to get the best price. And I think that this is where I really struggle, is getting the best price within the trend. And in order to get the best price, I believe, you're going to have to be buying or selling pullbacks within that trend. Okay? So there are a couple of indicators up here. I've worked with both of these indicators in the past. You guys may have not seen this slingshot indicator, but I'm not really using the whole thing. You don't have to use the slingshot indicator. But what you see this channel right here is really a 3862 moving average EMA. It's a 3862.
I gotta speed him up.
And
he's talking too slow for me. Sorry. I really get really picky with these tools. Because I speed them up, I will.
I mentioned this over on the Discord channel, and I don't know if anybody's really used this particular. I know that there's other popular ratios when it comes to moving average channels. the reason I kind of like this this channel is it's long enough. And I mentioned this over in the Discord channel on the Discord post. It's a long enough channel, meaning 38 and 62 periods, to not give you so much chop, so many false signals. But it's fast enough that you don't get on trades really late. So
See, now his idea of a signal is, I guess it breaks the thing out, but well, all I see on here is just so many spikes. He's on the British pound 5 minute chart. Like, man, you just got there's like 1, 2, 3, 4, 5, 6, 7, 8 entries here. Every time it comes to lead here, I just be pulling the fucking trigger here. Buy, sell, buy, sell. I just sell, buy. Everything, this standard deviation. I mean, this whatever this river, right? Buy, dump, buy, dump, buy, dump. I mean, these are all trades to me. Sell, buy, sell. What's it now? Buy. Pretty obvious. Down, buy, upsell. Down, buy, upsell. Down, buy, upsell. You know, I mean, isn't trading that easy in the end? Now it's just about size. God, it's just trading is so simple, isn't it?
that's why I really like this. And I've been looking at this for the last 4 or 5 days, kind of off on the side. And it really provides a lot of good signals, especially in trending markets. Right? I mean, it's simple. When it's green, you look for buys, and when it's red, you look for sells. It doesn't always work like that, right? I mean, markets aren't always this fluid or this nice of a setup.
So this is the problem. If they're not always this nice of a setup, why are you? In other words, this seems like a good idea. It seemed like a good idea at the time. Once you realize that if you were to get trapped in this shit here, because technically it's going up here, the trend's up, everything's okay, let's board the train, then they just rip you down because in the end it's all about price. You're just painting, like, this looks like a scarf on a chick or something.
Up, right? I mean, you have choppy days like this, and
That's not good looking.
I'll go over a lot of these charts. I mean, so these are all choppy days, right? So, I mean, obviously you want to be able to catch these nice moves. As a trend trader, you want to be able to catch and stay on these nice moves, and you want to be able to avoid these choppy situations. All right. So that's where this stochastics comes in. Now, I've used the stochastics in the past on the stream, and this is a 10-6-6 stochastics. It's a little bit slower than the default.
Anyways, it's all filter city. So
take trades on the break. Okay, so I'm taking trades off this break here, and off these breaks, a lot of times you're just not getting a good price. I'm just not getting a good price. So by doing this, I think that this is going to put me in trades at a better price, and I think that and overall that will improve my results. Still trading with the trend, just getting a little bit better price here. All right, so I think that.
Yeah, so this is what he used to do. He would trade here, he'd sell here, and get trapped. Yeah, I mean, this is why I'm just saying every time it's up, sell, and every time it's down, buy. Let's just build a position.
That in itself will help. The other thing is chop. Now, I tend to do a couple things. Personally, when markets get in a choppy situation, I tend to overtrade a little bit. And I take a bunch of really small losses, which end up being large losses. So I'm looking for a way to stay off that chop. But it's hard to recognize.
But don't forget, he's trading at the market. So the answer to that is experiment with pending orders, and just because it's hard to see here if you got filled on the long side, but the short side you can see them, and just put your orders up. Look at this screaming up here, takes out this wick, goes higher. Failure swing on the 5. Look at the tightest stop you could run on that. But he doesn't trade with stops. So I said everything I could suggest would never fit this guy's. As soon as he decides to trade at the market without a stop, it's like, wow. I mean, this is like, to me, it's like driving your car without like a brake pedal, without brakes. Just going to rely on downshifting.
if you go back and look at charts, and you go back and look at these charts and say, oh well, this was a choppy day, right? And this is easy to see in the past, but at this point right here, when you're going through real time, this looks like it's trying to break down, right? You just broke through a lower high. And this looks like a breakdown. You take a short here, and really you're taking a short at the bottom, right?
No kidding.
And this is just one example. Same thing.
Just sell above the envelope and buy.
Breaking out in real time. If you're looking at this in real time.
But the problem is, you see, look how many trades you buy, buy stochastics to the extreme, sell stochastic to the extreme. Didn't make money here, but you made money when you bought. But now the spread's the problem. What are they giving? Some shitty spread here at fucking FXCM? I can't see the spread. Anyways, so I don't know. Like I said, there's no way to. Your approach is so critical. So here, what's the trade? Buy right now. Right, buy. Place a pending order here. Right mouse click. Buy limit. I'm trading without stops now. Buy limit. Buy limit. This is how I trade. This is the only logical way to trade, in my opinion. I buy low, sell high. Sell limit's up here. Right mouse click, sell limit. So if you want to trade without stops, just put enough money in the account. Here's my sell strategy. There's my buy strategy. I bought one at the market for good luck. I think it's going to go down possibly. Let's look at the 1 hour vacuum. So here is the vacuum starts here. We have our first trailing vapor trail. Another one. This is a vacuum. The first part of a big vacuum. Once again, and it's stacking up. Right, see, there's the hole. More vacuum, then finally crush down and fill it. So it's accumulated vacuum all the way to here. And typically, it will turn around at some time window. So here's your time pivot. Top, bottom, pass out. Here's the, if you mark off the peaks and valleys, you'll have a doji window. Right. See this? Here's your doji, inverted hammer doji, whatever. Just means indecision, really. Right? And so if I bought one here at the market, I'm buy here on limits all the way into this vacuum. The problem is trading is really for stupid people. You just tell people, okay, you see this? You got to fill this up now with limits. Every basement floor. Right. This is where the stops are for the bulls. And they already stopped the bulls out here. So the bulls have their stops in. You grab their stops and dump them. You just made money. So you're a stop hunter. You're actually coming after. In other words, you're trading against. You're the guy that's stopping people out with your limits. You're that guy. You're a mean trader. So that's the problem. In here, you would have buy limits sitting here. So I've already got them. You're just going to buy low, sell high. See, my sells are up here. So I'll put one here at the rooftop. And if I go to the, here is the vacuum that's forming above us. And when there's one below. So we got this one, these twin peaks here. And that goes all the way back to here, right? That's the space to fill. Space between, right? Dave Matthews, right? Space between. And see here, look at this fill here. See this rooftop vacuum? Call them rooftops and basements. These bars are so big they look like buildings to me. See how they just nick it? They come into this here, and then they rip it back. So we come out there, tag that rooftop, rip it back. Just like when we tagged this basement floor here. We came below the round number. That's the big round number. Smash and grab. Coming in here. Plus you had a vacuum forming above that. Coming back the other way. Plus you got a doji here. In other words, you just took small bars and placed a buy stop here and a sell stop here. That's a mechanical trading secret. Put a buy stop here. Put a sell stop here. Low risk entry. Let her go. Same thing here. In fact, this is a better trade because this is a smaller day, quieter. Whether that's a doji doesn't matter. If you're just looking for small ATRs, true range, not ATR, no averaging, just bar by bar. Same thing here. Look, this is a beautiful, these are dojis. Should price vacuum. Fills here, does not fill here, and just autofill. Here's where they come back and they smash out the basement. So when the news comes out, if you're looking at this chart when the news comes out, you'll have a whole different view. Because you're in the middle of the story there. There's no zigzag. There's no top, bottom. There's nothing to look at but that. So see when this vacuum fills here, see how that's the trap. In fact, look how narrow this window is. This is the bid. Look at that. Well, bankers know they want, no, in this thing with the banker stuff, please, people. It's just a herd of people. Bankers are people too. It's all the same thing in my opinion. Bankers are people too. So we're getting a rally here at the end of the day, coming into 5 p.m. The scalpers just made a mint on this. Look at this thing. Take out the high of the day and rip back. So we took out the high of the previous day here and made a double top. In fact, inside of here is a failure swing with just a little bit higher. You would have got a better price too if you laid 2 pendings. That's usually not what people are going to do, because what I'm describing here is too fucking stupid, and I'm just too sophisticated for that trade plan. So look how we just go up and we just. This is the window, the sell window, but look how this micro sell window is. You're short here because of this rooftop. Then here's another short, and you would have got filled because this is the bid. And what's your risk here? How much did you make on that trade? So that's what you're doing, in my opinion. Sure, you could have pulled the trigger here. They trap you. They trap the new lows here and here, but isn't it better to say, well, I know I have a buy limit sitting here, so that's done. That's taken care of. Plus, I got a buy limit here that never filled. And I got a buy limit based on this swing low, which, don't forget, this is a 1-hour chart. This is, after this swing low, it comes up here. If you didn't sell this rally, then you know that this is the low and that's a high, that's a good price. It's because it's lower than that. You had 3 hours to place this buy limit. If you came back, if you had a scalp built into this where you took something off the table when it goes up a little bit, it probably only went up about 8 pips, but you would have paid for that. Now, this is the 1 hour. We're coming back, relaxing here. And what could possibly happen here? We have a vacuum on the top side forming. Right here. It's pretty ripe for the pickings. Here's your buy stops are stacking up. Vacuum stops. Right there. And is this the place to sell on limits? Well, maybe the place to cash out. When people get stopped in, you got to wonder. If breakout trading sucks and people get trapped, then breakout trading here sucked because you traded this breakout and now you're at break even or worse. If you put a sell stop here, you're trapped on that side. Well, what's the trend telling you? Here's a quick and dirty way to do. To me, the trends are very, the large trend, it just doesn't matter to me. I say it's going up right now based on this pullback, this failure swing. This is wave 3. This is 1, 2, 3. This is wave 4. And maybe we complete up here or something coming into Asia. Maybe we can make it back to this round number. But for that to happen, first we got to take this shit out. But the sellers are going to come in here. They'll pull it back. So everybody's going to make money, buyers and sellers, buyers and sellers. How big are they in? is going to determine whether they make money. Because if you're in really big on the wrong move, you're fucking dead, right? We all know that. That's a classic. If you're really big on the wrong move, you're dead. So the guy that sold a little bit, he sold a ton here and he got out already. He scalped something because right out of the gate, you got to take something, otherwise you're fucked. So can you see the trend here? And here's a trend. Look at this going up. How do you know this is a trend? Because you can draw your first pullback here. There's your trend line. It's very easy. How do you know you're in a downtrend? Not a downtrend, but it's a correction. See, failure swing. Here, downtrend. Right. In fact, it closed here, then it whipped up, so you would have got filled on your sell limit. Confirmed downtrend. There's another downtrend, but we're forming a triangle now. So triangles work? Well, fuck, of course they do. Because triangles, if you draw it at close, it's a representation of a lack of volatility is all it is. Here's the floor, right? This is the bottom that became a top in time. Crushed down, pass through. People want to get the hell out. Plus you have this big spike up here. You could have, this is a, here's a trade, right? No fill here if you have sell limits. And unless you're willing to put a sell limit at the apex of this last triangle, right? Anytime you can connect two bottoms here, so a very sharp triangle there. Lack of volatility, boom. Or just have a mountaintops. 1 hour chart. So anybody that's trading backwards from what you've been told, you would have bought this zone, and you would have bought, I don't know if you got filled, but you would have tried to buy it right here. And it came very close. But if you had an ask order here, it didn't get filled. You didn't get filled there. And that was off to the races. Plus you got this trend line. You can draw this trend line, and this trend line actually held up all the way to here. So it just means it's a fractal. This is a triangle within a triangle. It just means it's fractal. This is pulling back to here. It looks like we're in this triangle. So it's triangles within triangles. Right? You can draw this up, but it's the pressure building. In my opinion, it's the uncharted water. It'll be sucked into. We've been down here. This is the double top, triple top. Becomes not quite steady. It didn't even, so strong of a trend that didn't even pull it back enough. Still drifting up. I don't have very many currencies on here, but like I said, it doesn't, what it is it's about, this is the 1 hour chart, and you can see all the money being made here. And how many, like this is a downtrend. This is a downtrend on some on some pace. I mean, this is like 8 hours down. That's a downtrend into a correction into uptrend. So yeah, the word trend's ridiculous. I'm saying the last known trend, last known price pulse. And if it pulsed up more than it pulsed down, then it's an uptrend. It's just, it's doing bigger moves in one direction. But it doesn't mean that it can't sell off, because this isn't an uptrend, but look at this sell off here. Look how brutal this correction is. So this is like, you can build all these little, and then inside of, if you zoom all the way out, a MetaTrader, this is inconsequential really, right? Now look at this thing. And as you zoom in, you're like, really? No Fibonacci. I mean, that would just be insane. I used to get anxiety attacks using Fibonacci, to be honest with you. I'd sit there and try to get it to work, and I think, oh, God, I just can't take it. I can't look at it. It's just and moving the mouse around, and I just got all freaked out and had to walk away. It drove me nuts. This is so stupid. This is bad enough here. Now, what's the trade plan for this kind of thing? This is the 1 hour chart. Well, here you can see if you bought like a slab, right here, here's the wick. That was a good fill. Beautiful fill. Now, if you look at the 4 hour, it's the basement floor of this bar. So trade block or whatever you want to call it. Yeah, I mean ICT. You can call it whatever you want. It's like, are you placing the orders or are you trading at the market? That's my only. That to me is the big. Is a style of trading. Right. This is the big determiner. And you'd have to build, if you're building around trading at the market, then you're probably not going to get involved in bad pending orders that are too big and they're too close to the market. In other words, if you're going to trade an outlier, it's got to be an outlier pending that may never fill. But if it's going to fill, it'll fucking make a ton of money. And it also presupposes you let it make a fucking ton of money. Had you sold up here saying, well, I'm going to ride this to the next vacuum edge into here, you did really good, right? But most of your money was made in 4 hours clean here. This is all bullshit. You stayed around. That's why price pulses in range trading is more money, because look at this. In 4 hours you made X, and then you waited like what? Into the weekend, just this bullshit. Bam, and then just treading water here. And so yeah, it looks like we could drift up maybe to, and the logical place here on this 4 hour chart is here. Might make it to here by Asia. And then the sellers come in, the buyers come in, the sellers come in. And in the end, if you're lucky, your 10 or 20 or 14 or 13 EMA is going to say, oh, I agree with that. And that's the problem with that shit, is that look how hard this moved. By the time you're moving average, you realize that this thing, it's over. How about this move, for God's sakes? And I'm sure there's divergence here. I guarantee you on a 3-period RSI, there's divergence here. In fact, there's divergence on the trend line. If you want to see divergence without having to get an oscillator, just take this rate of change, run this on the inside, right? Run this on the inside of the channel. Failure to touch the channel. Here you're if you hang it off of this, you're overshooting the channel. So you can make your moving average look like this. You could say, oh, I'm right here. We should bounce off the channel. Here you could say, and if you're running a 3-period RSI, it's going to be like this snug. You're looking at this. Can't you see it? You're looking at it like this, just like this one here. You say, okay, this is it's hugging this projected line. We got 1, 2, 3, fourth hit. Pretty amazing. And you'd probably see divergence on this one, but maybe not. This looks very deep. But if it doesn't touch this line, it's diverging away from at least the trend line. Failure swing. Whatever you call it, you still need a trade plan for this shit. Here's your classic break. Come by, breaks through, dilly-dallies around here and tanks. It's just rolling over. That's all. See, in time, it's fading in time, but it's having these spikes that really aren't trend. And most moving averages aren't based on high and low. They're based on closing prices. So I still don't understand why people are drawing the trend lines like this. What you're doing is drawing volatility lines. If you draw them on the wicks, so if you drew a volatility line, it looks like this right across these wicks. But see, the inside of price is way tighter. So you have the triangle here. And I think it makes a huge difference because you're going to draw a trend line like this, whereas it's really completely, this price pulse was enough to drive it here, and you could have traded it, maybe be trading it from the long side slightly. Plus you get these wonderful triple bottoms here. You get a nice clean channel, whereas if you try to draw a channel on wicks, it looks like that. It's kind of silly. It doesn't give you that tempo that closing price gives you. Anyways, that's what I'm thinking. some guy asked me for that to close all open and pendings. It should be in the last video, the link, or in the one they called markets. You go, I'll put it in this one. It's Hightail site. It should be in there. Almost the whole platform's in there. There's like a bunch of scripts in there. And you could just, I'm trading manual on here. I could just do it like this, right? Now, I'm in a 1K right now. I'm up 31 cents. And I missed a really good entry here. This is 4-hour chart, so I missed on this account. This vacuum here, there's an 8-hour vacuum there. 8 hours new lows. That was a great entry right there. Bam. And what does it look like on the 1 hour? That's that haul. So you really want to buy these fresh lows on pendings, I think. So those would have been filled, but I'm putting them in late now. But that's how I trade it. And then tonight I would sell here on limits and just let them fill me. Probably scalp the pullbacks because they might reload. There's plenty of chances to reload the gun too. But this just goes on and on. Plus you could trade at the market. So you could add on, you go, you know what? That was great entry. I'm going to add to it. I'm up on the pendings. The reason why you don't use pendings is so you can go to fucking sleep sometimes. And, but definitely I understand the market, trading at the market and trading on pendings. There's definitely a fork in the road in your mind there. And, not to say you can't. In fact, once you place a couple of pendings, then you could trade at the market a little bit. Be like, well, I'm trading half of the market, half on pendings. And which one's making more money? I think that would be a big contest. What makes more money, my pendings or my market orders? And just because they're pending doesn't mean they're going to make more money. You have to place them in the right places. And the expiration has to be legitimate for the volatility. So if the news is about to come out in 40 seconds, you probably don't want to place a pending that lasts more than 15 minutes because the chances for the market to move into your order is going to, that 15-minute window is definitely going to mean something. So if it lasts 8 hours and you're 10 pips away from the market, you're really saying, well, I'm probably going to get filled on this. And what is the volatility of the market? So how deep do your orders go? And that was the thing that some guy made some robot based on this indicator I have that's called Spectrum. It's inside there. And it just throws out projected, based on a percentage of what's going on right now, it just throws out future support and resistance stuff. And if you placed orders there, which I wanted the robot to place orders out there. In other words, if the market really gets crazy, your orders are going in super deep. And it has to be dynamic. So as the market calms down, now you go into trading at the market. You trade with tighter stops at the market. The market gets quiet. Of course, coming into Asia, the spreads get wide, so it kind of destroys some of the profitability because now the market's quiet. You can run tighter stops, but now they have to be wider. Now they're going to cost you more because the spread's wide. And when the market before the market makes a move, it gets all spastic. And maybe it gets all spastic, calms down, then it makes a big trend move. Makes a move that is making new highs on a larger time frame. That's all it would be. And as far as trends go, what time frame is your trend on? As soon as you say that, well, I'm on an uptrend on the 15 and downtrend on the 4 hour. Okay. So which do I trade the uptrend on the 15 minute? It doesn't mean you make any money because you'd have to have the right stop and the right sizing and this and that and the other thing and the right amount of trades per day and the right amount of trades per week, per month. Don't forget, just because you could buy a high-end car doesn't mean you can't run over small children. So it doesn't, none of that matters. You could just be a goof and make money trading. If you were consistently goofy and you're making these trades and you're consistently making money. and you don't mind waiting 4 to 8 to 12 hours, and you can see, you know what, I could probably get out here and reload the gun. And once you figure out, you don't have a fear of missing out because you know you could pull the trigger. I like to think of it like this: if I know I can pull the trigger with a 200 pip stop on a 1K, then I have no fear of placing 80K at a good price. So if I can flirt with the waitress, and she's not going to say, "Oh, let's get married," then I don't feel like I'm missing out because I've got pending orders. Right, I wrote my name on every. I broke into the girls' restroom. They call it. Who's resting in there? And I wrote my name on the wall. Call me for a good time. With my pending orders. So I think you have to cure those sides of your brain. Otherwise, you're just going to go to the clothing. What's going to happen is you're going to warp reality, I think. And it's just, in the trading world, it's just too easy to fall in love with indicators and are thinking, well, this is it. This is it, because you still have to be aware of the terrain pip-wise, the spread pip-wise, what time of week it is, what time of day it is. Now here it is Wednesday. So if we take out the high of the week now, if we take out yesterday's high and the high of the week, we could potentially make it above 124 in the euro. Now we'd sold off. So what are the trades you missed this week in the euro, and how did you get destroyed? And what does the market typically do? Goes up hard. Here's that hard up pause here I was talking about. Hard up pause, keep going. And look at the daily. Look at this fucking mess. Look at this trend here I wrote on the 4-hour. Look how it looks on the daily. Look at these trends people talk about. Here's a trend. But people say, what is the trend here? And you'll see people in these chat rooms, they'll do a chart like this. Well, it's obviously in an uptrend. But who's making the money here? If you say this is an uptrend here, it's obviously in an uptrend. Yeah, but I bought here and just got killed. Bought here, got killed. Bought here because I like this trend too. I thought this was the better one, stronger. I bought right there on that pullback, and I didn't get out here on that last climax, and I'm like so pissed off. And then it came all the way back to here where I had my stop, and I really wish I would have bought here, because this is an uptrend. These are all uptrends, like a Gann fan too. Right here you can do this. So you got this one, you got this one. This was supposed to hold, and you got this one. But how many pips are in these things? Look at this pip. Look at this pip. Look at 3 days, 400 pips. Now, is that a trend? Well, it is on the 4-hour. It looks amazing on the 4-hour. So you gotta zoom out. This fractal stuff's tough. Look at this thing screaming down. But it's really about this, in my opinion. And there's not a lot of these trades. Look at this entry. Look at this new highs here. Just screaming up in there. And look if you held all the way edge to edge on that, how much money you made. It's all about perspective. And here it doesn't look like a good trade. Here you're like, I don't know, man. It's 4-hour chart. Like, really? Oh, I don't know. I like this. Yeah, I could see myself. And could you see yourself holding this thing all week long? And here's this news came out, probably just crushed everybody. And while it's doing there, in my opinion, is that there's pent up vacuum in here and then smash. Here too. We could crawl out of this thing, make it back to here, retest. But you know the sellers are coming in here. So you put sell limits up there. And it's that stupid for me anyways. That's how I see it.